Hey, what's up, stock compounders? Brad here. So today I want to do an analysis of Alibaba. Alibaba has been on my radar for a while. I've wanted to dive into it, and it really feels like now is the time with Ray Dalio adding pretty big to his position of Alibaba in Bridgewater's portfolio. And another great investor I follow is David Tepper of Appaloosa Management. And currently, Baba is his second largest equity position. So it felt like it was time for me to dive in to Alibaba. So we're going to go through a number of different tabs here, all trying to help us get a sense for what is the value of Alibaba. Okay, so let's get into it. The first stop here is Phil Town's Rule 1 Toolbox. All right. Now, essentially what Phil Town has put together here is a number of different metrics looking back over the last 10 years that help us get a sense for what kind of moat does this company have, right? How strong is it against competitors trying to come in and steal market share away from Alibaba? And a few of those numbers are book value per share, growth rate, earnings per share, growth rate, operating cash per share, growth rate, sales growth. That's kind of what makes up the moat. It gives us a sense for how strong is the moat of this business, which is really important for us long-term value investors. And then the second set of data that we're looking at is gives us a sense for how good is management, right? Obviously, we want very skilled and management with integrity at the helm here. So we're looking at return on equity and return on invested capital, and also debt. Is the company being, reasonable with the debt, or is the debt getting out of hand, which can be a big problem for equity investors if that debt, if the company gets carried away with too much debt. So, I mean, these numbers are fantastic, guys. I mean, you don't see many companies like this. We've got a moat score of 100 and a management score of 97. And, to be honest, I think the debt score should be higher. It says 91 there. But Alibaba has 4 times as much cash on their balance sheet right now as they do total debt. Okay. So to me, it looks like a very strong financial position. So, that just gives us a sense for, is this a company worth looking at? Is it a company that's worth investing in over the next 10, 20 years? And based on this, I'm really liking these numbers, guys. It's definitely a company worth diving deeper into. So let's do that. The next stop we're going to make is Value Line. Now, Value Line is a fairly expensive investment research service, but I found a hack. So I got a membership at Fairfax County Library in Virginia, which allows people out of state to still get memberships. I think it was like $30 or something. And with that library membership, I can access Value Line. All I need is my kind of library account number to access Value Line. So awesome deal there. So what I'm going to do, I'm going to type in the ticker BABA. You can see it's an ADS, an American Depository Receipt, which makes it easy for me to buy as a U.S. citizen, even though it's a Chinese company. So let's click on that. Okay. We're going to scroll down. And I want these Value Line PDF reports. These are fantastic, guys. It's a 1-page report. There's just so much good information. So we're going to look at the latest report, November 6th. Pop that open here. And it's really going to give us so much great financial data all on one page. You can see what the stock price was on the date that this report came out. A few numbers that I was really interested on here. Earnings per ADS, per American Depository Receipt. Capital structure as of June 30th. We've got the total debt. We've got the number of shares out, the number of ADS shares out. It gives us the cash. What else? It gives us earnings per ADS through time for each quarter back from June 30th, 2017. And it even projects, now I didn't use these numbers, but it projects the earnings per ADS into the future, about a year and a half there. And then it gives a nice little description about Alibaba. Just so much good information here. So some of the information to calculate the value of Alibaba I pulled from this page here. I'm going to try to link to this in the description because it's just great stuff. Oh yeah, another thing I used was the average annual PE ratio going backwards. That's a number I used to kind of help me with the margin of safety valuation method that Phil Town uses. So this is one source of financial data that I use. And the reason I'm talking about where I get the financial data for Alibaba, if you use something like Morningstar, if you use Yahoo Finance, there's a lot of kind of mixing of numbers, okay? Whether it's, the Chinese currency, whether it's, regular shares versus ADS shares, things get jumbled, okay, when you're looking at Morningstar or some of the other sites. So I wanted to find sources where there's not mixing of different kinds of units for Alibaba's financials. And this is a great source here, Value Lines, kind of one-page report. The next source is the SEC filing for the annual report of Alibaba. So you just go to sec.gov, you type in the ticker BABA under company search, and you can pull up the filings for Alibaba. And the one that we want is this 20F that was released on July 9th. So let's click that. That should pop that open whenever my internet decides to kick it into gear here. And so all of this information is up through the end of March 31st, 2020. So this is great. I mean, this is if you're considering investing in Alibaba, it's pretty important that you read this report. There's so much good information in here. It really help you understand the business. But the main thing I was looking for were these financial statements. Okay, so we've got the balance sheet. We can see the cash in US dollars as of March 31st, 2020. Short-term investments, investment securities, again, investment securities, investments in equity investees. Alibaba has a lot of investments outside of kind of the operations of Alibaba. And I think it's important to consider those when you're valuing Alibaba. It's more than just this kind of e-commerce website. So there's some good information in here. So another great place for financials is Alibaba's SEC filing. What was it? I think it was the 20F. Okay, so let's do some valuations, guys. There's two valuations that I did for Alibaba. These are both from Phil Town. The first is the payback time price. And essentially what this tells us is if we buy the whole business today, how many years is it going to take us to pay ourselves back through free cash flow? Okay. And of course, so we need to know what we're starting with in terms of free cash flow. What was the free cash flow for the last 12 months, approximately? In this case, it was the free cash flow for the year ending on March 31st, 2020. That was the most recent data that I had access to. And that was 18.5 billion. And I got that from the annual report. If you want to find that, all you have to do is search free cash flow. There it is. You can see US 2020, $18.489 billion. So that's what I'm using here. The growth rate So growth rate can be a little bit trickier to try to pin down. The way that I did this, I looked at some of these Rule 1 toolbox numbers, and I like to be conservative with growth rates because with a high growth company like Alibaba, the growth looking back 10 years is often going to be much stronger than the growth moving forward 10 years. Because as companies get bigger and bigger, it's harder and harder to grow. The expression is a fat wallet is the enemy of high returns. And Alibaba, it's fairly big. I think the market cap is somewhere in the $600 billion, $600 to $700 billion range. So, pretty big company. I decided on 16.3% for a growth rate. And I cheated a little bit with that, guys. What I did was I looked at this value line report. And, Phil Town has kind of a rule of thumb. The growth rate is generally about half the recent price to earnings ratio high. Okay. So if you look at price to earnings ratios, the high is 32.6. Okay. Looking backwards. So, to get the annual growth rate moving forward, I really just took half of that, 16.3. All right. I'm sure there's more scientific ways to do that. You can see they estimate the growth rate moving forward or the PE ratio moving forward is going to be around 30. So, 15% might be a little bit more conservative. But I think Alibaba has such tailwinds being in China, just how quickly that economy is growing. So I'm comfortable using 16.3% for the growth rate. So essentially what that works out to, an 8-year payback time buy price. So if I buy the whole business for $309.6 billion, I'm going to get my money back from free cash flow in 8 years, okay, which is great. That's a good deal for a public company. Now, this is effectively the enterprise value, okay? What I want to figure out is what would I be willing to pay for a share of stock, for an ADS, right? Based on this enterprise value. So I need to find the market cap, and then I need to find the share price. So essentially, enterprise value is the market cap plus the debt. So you've got all of the owners, all of the investors in the business, either equity or debt, and you subtract the cash, okay? So in this case, the cash, just over $100 billion. Now that's cash and cash equivalents, and I included the equity investments in that. I'm assuming those are pretty liquid. If the company needed access to that, they could pull that out pretty quickly. And I also want to give them the benefit of owning those, right? That's a plus. If I'm owning Alibaba, I'm happy that I have those investments. So we've got the cash equivalents and investments here. The debt, $17.75 billion. And the number of ADS outstanding, 2.71 billion, okay? So, I factor all that in, and I get my buy price. So at $145 per ADS, Alibaba is looking pretty attractive. So that's my payback time price, $145. Now, in order to calculate the margin of safety valuation, I need a few things. I need earnings per share or earnings per ADS, $7.90. I pulled that from the annual report from the SEC. I'm using the same growth rate, 16.3%. And then this PE ratio, what's the price to earnings ratio going to be in my estimation in 10 years? Okay. Essentially what I'm doing, the earnings per share today, I'm growing that earnings per share for the next 10 years at 16.3%. So this is my future earnings per share in 10 years from now. And I'm simply applying this price to earnings multiple to the future earnings per share in order to get the future share price. All right. And then I'm discounting at 15% because I want to make at least 15% on this investment. So I'm going to discount each year at 15% to get from 1165.85 back to today's price. And that gives us a fair value of Alibaba stock at $288. Now, this is just based on earnings. This doesn't factor in the balance sheet situation, the cash versus the debt. So in order to do that, I took what I got from this last page. I took the cash minus the debt divided by these number of shares, and I can add $31 per share because of how strong the balance sheet is. So if I do that, I get, what is that? 313? No, 323. No, what am I doing? 319. Whatever. So if I do that, I take half of that for my margin of safety price because I don't want to pay a fair price, right? If I pay a fair price, if something happens in the future that's not what I expect with this company, I can still lose money if I pay a fair price. But if I pay half of what I think is fair, the future can unfold in many ways that aren't great for me as an investor in Alibaba, and I can still make money. So this is kind of the half of the fair price right here, $160 per share. So that's going to be my margin of safety price, $160. So we've got a payback time price of 145. We've got a margin of safety price of 160. I want to get a couple more data points here, guys. I want to look at super investors. Where did they buy Alibaba? Okay, so there's two super investors that have been buying Alibaba recently that I follow regularly. And let's see. One of them is Ray Dalio. Okay, so Ray Dalio added a lot of Alibaba in Q2 of 2020. And the way I found that out is I just looked back through the 13F filings to see, at the end of the first quarter, how many shares did he have? End of the second quarter, end of the third quarter, what was the change in the number of shares? From the first quarter to the second quarter, he added almost 700,000 shares, from just shy of 300,000 to 951,000. So it's a huge add in the second quarter. Now, the second quarter, the low price for Alibaba was $187. Okay. So if I just assume Ray Dalio, in his infinite wisdom, was able to buy at that low of the quarter, that gives me a conservative estimate of at what price point Ray Dalio is excited to add more shares of Alibaba to Bridgewater's portfolio. So 187, okay? I'm going to assume that's what Ray Dalio bought in the second quarter. Now in the third quarter, he also added significant numbers, almost 400,000 shares, okay? And the low in the third quarter was $216, all right? So, that gives me a pretty good sense of what price point Ray Dalio is excited to add more Alibaba to his portfolio. So, I can get a sense for what one of the best investors in the world is willing to pay for this same company that I'm, trying to figure out what I should be paying for it. So, it seems like 216, that's a pretty fair price to pay for me, at least as far as I'm concerned, to start buying into Alibaba. The other investor I looked at was David Tepper. He did a lot of buying in the second quarter. He added about 50% to the portfolio in the second quarter. And like I said, the low in the second quarter was $187. So, you know, that tells me it's a pretty compelling price point, $187 for David Tepper. Now, David Tepper did sell off a little bit in the third quarter. He actually sold about a third of his stake in the third quarter. Now, Alibaba did increase in price quite a bit. Let's just take a look at this chart. So the third quarter starts here, basically July 1st, okay? So, you know, it's possible David Tepper saw the price get up to $317 and he thought, you know, this is too much. I got to take some off the table. So that, you know, that's possible. And that doesn't deter me at all that he was selling off in the third quarter. I still like that 216 buy price point, which was right here. That's not it. July 1st, right here, the low in the third quarter. So that's my target buy price, guys, $216. Now, I'm not going to buy in a whole 10% stake at $216. I'll probably, you know, add in like a 2.5% stake at $216. And then if it continues to go down, I'll add in more. I'll do what's called kind of tranching in, which is an approach that Phil Town likes to use. But I just want to share that, how powerful it can be to see kind of the conservative estimate of what price point these great investors have bought in to the stock. Because these, you know, valuation methods, you know, they're useful if we don't have access to what super investors are doing. But super investors can shed some pretty interesting light on what might be a compelling entry price point. Just wanted to share that. And I just want to show here David Tepper. You know, you can see it's his second largest holding, Alibaba. You can see here he did reduce by about a third in the third quarter. And then the last thing I want to talk about, Value Investors Club. Value Investors Club is a fantastic resource to see great write-ups from very smart investors. And Alibaba has a write-up from February of 2019. It actually has two write-ups from February 2019, which is really cool. One of them is this one that I pulled up here. Another one is a short write-up, okay? So it's a short thesis for Alibaba, which is awesome. So we get to see what an investor who's long on Alibaba sees in it, right? What they think about this company. We can also look at what does a short think of Alibaba? What does someone who is bearish on Alibaba think? And these are really from the same time period. So it's fantastic that we get to see both the bull case and the bear case in Value Investors Club. But essentially this bull case, you know, the price point was $177, which, you know, was even lower than what it was in quarter two of 2020 when Dalio was really loading up and Tepper were loading up. So clearly a solid price point at $177. And this investor saw upside or kind of a fair value per share of Alibaba between $242 and $298 per share. Again, that was over a year and a half ago. So, you know, that thinking might be quite a bit different now. So don't focus too much on the numbers here, but it's great to just understand kind of all of the factors that this investor is considering when valuing this company, when really thinking about, does it make sense as an investment? So highly recommended, guys. Check out Value Investors Club. So that's it, guys. I just wanted to kind of go into some valuation stuff around Alibaba, let you know that, you know, Dalio, I have such respect for Dalio. And if he's buying pretty massively at at a at a minimum of $216 per share, that gets me excited. So I do have a target buy price on Alibaba of 216. Currently, I think it's at like $257 from today, 257. So, it's not too far. And if we keep getting negative press about the Ant IPO being suspended, about the Chinese government trying to slow Alibaba down, we could very well hit this 216 price point in the very near future. So anyway, guys, that's all I wanted to share for today. Let me know what you think of Alibaba. If you guys have researched it at all, I'd love to hear your thoughts about it. And with that, I will see you guys in the next video. Take care.